Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. Today we're diving into a report from Nukkleus Inc, and let's just say there has been some interesting movement to unpack. Before we jump in, if you are digging these straightforward dives into financial world, make sure you hit that subscribe button. And if you want to join a community of fellow corporate sleuths, check out the link to our Discord in the description below. Alright, let's get straight to it. This filing is a Form 8, which is basically a company's way of telling the public about any major events that shareholders need to know about. And they have to file it pretty quickly. Think of it as a news alert from the company itself. The company in question is Nukkleus Inc, or Nuke as you might see it traded. They're a Delaware incorporated company, and that 001-39341 number is their commission file number, which helps track them in the SEC system. Now, Nuck has a couple of things registered with the SEC for trading. We've got their common stock, with a super small par value of just a little bit less than a penny per S-hair. This is pretty standard for many companies. And then there are these warrants. These are like options that give you the right but not the obligation to buy a share of the company's common stock at a specific price. In this case, a hefty $92 per S-hair. These are often issued as part of other deals or offerings. Something else to note right off the bat is that Nukkleus has checked the box indicating they are an emerging growth company. This means they're still growing and have some regulatory perks, like potentially using extended transition periods for new accounting standards. It tells us they're likely a younger company still finding their footing. The main event here is under item 7.01, which covers Regulation FD disclosures. This regulation is all about making sure that when a company releases any material information, it is made public to everyone at the same time, not just to a select few. So, what is the big news? On the 28th of November 2025, Nukkleus announced that a special purpose acquisition company, or SPAC, that they're involved with, called Steathy Acquisition Corp, or C2 Acquisition Corp, or C2I, successfully closed its initial public offering. Essentially, Nukkleus is launching another entity through SEC that is now publicly traded. Then we move to item 8.01, which is for other events. This section gives us more details about that SEC IPO. SEC closed its IPO by selling 17,250,000 units. And the underwriters, the folks who helped sell these units to the public, they also bought an extra 225,000 units because they saw a lot of demand. Each unit was sold for $10, and this means SEC raised a massive $172,500,000. That is a significant amount of money to kickstart whatever business SEI2 plans to pursue. Now, what exactly is in these units? Each unit has one Class A ordinary share of CST. Remember that super low par value again, it's $0.0001 per S-hair for these two. But the kicker is that each unit also comes with a share right. This right entitles the holder to get 1/5 of a Class A ordinary share once CC completes its main business deal. Its initial business combination, this structure is pretty common for SPACs, creating multiple ways for investors to benefit. Who is behind all this? It is SE Capital II sponsor LLC, and importantly, this entity is an indirect subsidiary of Nukkleus itself, with Nukkleus holding the majority stake. So, Nukkleus is the main architect here, essentially sponsoring this SPAC. On top of the public sale, South Carolina 2 also sold 255,000 units to its sponsor, which is our Nukkleus-controlled entity at the same $10 price. This is often called a private placement, and it's a way for the sponsors to invest alongside the public and align their interests. Finally, we hit item 9.01, which is about exhibits. This is where they tell you what other documents are attached to this filing. The most important exhibit here is Exhibit 99.1, which is the actual press release from Nukkleus dated the 28th of November 2025, announcing this whole SPAC IPO closing. You can find the full wording of that announcement in that exhibit. And the report is signed off by Menachem Shalom, the Chief Executive Officer of Nukkleus Inc. His signature here under the required date of the 28th of November 2025 confirms the official filing of this report. Now, let's look at what this all really means. Nukkleus Inc. is essentially using a SPAC as a vehicle to go public or to raise capital for a specific venture. This SPAC, South Carolina II, has successfully raised a substantial amount of money, $172.5 million, through its IPO. This shows there is investor appetite for SPACs and for whatever Nukkleus plans to do with CST in the future. The fact that Nukkleus holds a majority stake in the sponsor entity means they have significant control and will likely benefit directly from SECI's future success. The big takeaway here is the creation of this new public entity, South Carolina THEC, backed and controlled by Nukkleus. The company's strategy appears to be focused on growth through these kinds of specialized acquisition vehicles. It's a way to acquire or merge with other businesses by using the public capital markets. The $92 exercise price on the warrants is also quite high, suggesting the company has very optimistic expectations for its future stock price. What are the risks? Well, SPACs. In general, carry risks. CSD needs to find a suitable business to merge with within a certain time frame, otherwise the investors could lose their money. The success of this entire venture hinges on CSE identifying the right target company and integrating it effectively. For Nukkleus, the success of CCHE is directly tied to their own future financial performance and reputation. If CCA fails to perform, it could cast a shadow over Nukkleus. On the flip side, the opportunity is clear. This IPO provides CCI2 with significant capital to pursue strategic acquisitions. If they can execute well and find solid businesses to bring under their umbrella, Nukkleus could see substantial growth and value creation. It's a high-stakes game, but the successful IPO is a strong first step. In conclusion, Nukkleus Inc. is making a strategic move by utilizing SC Acquisition Corp. To tap into public markets, the successful closing of Sext2's IPO with substantial funding is a positive indicator, but the real test will be Sext2's ability to find and successfully execute on its acquisition strategy. It is a bold move, and we'll be watching closely to see how it plays out. Alright? That is our breakdown of Nukkleus Incorporated's latest filing. What is your take on this SPAC maneuver and what it signals for the company's future? Do you think this is a smart growth strategy or a risky bet? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And make sure you subscribe for more deep dives into corporate filings just like this. And hey, don't forget to check out the Discord link in the description to keep the conversation going. Thanks for watching, and we'll see you in the next decode.